If you ever find yourself trying to invest and you don't know where to start, you don't know what to buy first, or you may not even have the time commitment to research and actually buy the investments, look no further. In this video, I'm going to go over the major investment types and how easy they are to invest in based on their grade that I give them. Let's dig in. Hey, what's going on, everyone? My name is Maoli Voti with financiallypresent.com, your one-stop shop for financial and investment education. And in this video, I'm going to break down the major investment types and give them a grade because ultimately the investment landscape can be confusing when you're doing this on your own. There are a lot of things that you may or may not be doing, and let's say you're doing things right, but you may not know because you have things that make you wonder, and then you start to wander. You might see people on social media with their G-Wagons or they're flashing their returns of maybe crypto or other day trading returns, and it makes you consider jumping into other investment types, and you may or may not have even done enough research to start investing in those things or know if it's appropriate for your level of risk. So I'm going to break down some various investments for you, and we're going to start with a list of 5 investments. We're going to do variable annuities, stocks, options, mutual funds, and exchange traded funds, and I'll give them a grade. But before we do that, let's get this straight. A lot of these investments, there's nothing quite wrong with them, except there may be a learning curve associated with them. So some are more easily understood, and or others have too many complex ways to be right about the investment, and there are not enough ways to figure out what's right and what's wrong. So it's more important to have some level of investor discernment, and that's why we're going to have grades for these different investments. So first off, we're going to start with variable annuities, and I give them the grade of D. Just for a lack of flexibility and very, very complex for the average investor to understand, or even some of the salespeople or insurance salespeople that sell these components. What tends to happen is investors don't understand how the insurance component and the stock market component are used within the investment. They don't necessarily understand that the annuity payments may underperform what the stock market may do over time. And then the flexibility with the investment can be just unfortunate. The fees associated with making changes or taking money out early or changing your mind when it comes to a variable annuity is just unfortunate. It does not help the investor. And often people end up being confused. You aren't able to change your mind very often or stay on specific track. And these are generally investments that are just mainly benefit to people who are over 59 and a half, and they are hoping to take this money out and be at a lower tax bracket in the future. Variable annuities are not designed for everyone. There are very few people that they are good for, in my opinion. But due to their lack of flexibility and this difficulty in understanding them, I give it a grade of D. Next, we have options. Options, I love them, but I'm gonna have to give them a C-. Options are very, very flexible, but the learning curve is extremely big when it comes to options. You have the flexibility of being able to use them for a conservative strategy or for an aggressive strategy, but ultimately it's very difficult for brand new investors to understand them because even all the way down to entering a trade can still be very, very confusing. Options are more geared towards short-term investing, but you can use them for long-term strategies. I personally love options, but that's because I've studied them, I've been licensed to sell them in the past, and I've used them on my own, and I've attended seminars, I've even led seminars on options. But ultimately, it's based on short-term bets on the behavior of an underlying investment. And if you don't understand that underlying investment, or you don't have some level of technical analysis in your tool belt when it comes to investing, you can find yourself in deep trouble with options trading. And I know plenty of people who've tried to trade options, and something as simple as not understanding what they were doing or not being able to enter a specific order in time or to do it properly made them lose a decent amount of money. And you want to be able to thoroughly know what you're investing in, especially when it comes to options. And because of the learning curve, I give it a C-. Most of the people who are able to trade options, generally they're going to do a lot of short-term trading and investing. And in order to do that, you have to understand something we call the Greeks. So that would be the delta, the vega, the theta, and so many other details of technical analysis. And then there's the Greeks when it comes to the options trading. Now we have stocks. Stocks, I actually give them a grade of C. Okay, stocks can be extremely flexible, but also very rigid when we talk about long-term investing. And as you know, I was a former stockbroker and investment consultant. I love stocks. I own a lot of stocks personally, but ultimately as a new investor, there are, to be honest, too many ways to make money with stocks or lose money with stocks. And it makes it very ambiguous. What's the right way? Is it technical analysis? Is it fundamental analysis? Do you buy and hold shares for a long period of time? Do you become a swing trader and invest shares maybe for a shorter period of time, a few weeks to a few months, and then you sell them? Like, you can make money doing any of those types of ways, and it can be hard for anyone to tell you if you're right or wrong. And that is part of the ambiguity and the confusion of stocks. There's so many different ways to go about it. And in order for you as an investor, a new investor, to be successful, you have to develop your investor discernment, as I like to call it. But because of all of these variables and all of these different styles of investing with stocks, it can be hard. So I give it a C. Now for mutual funds, I would actually have to grade them a B. Simply for the ease of their use and the variety that's available. So with mutual funds, when you pick them, you don't have to be 100% correct. You just have to be consistent. They're designed as long-term investments that you put your money into on a regular basis over time. Think of it as if you decided you wanted to buy a fruit basket. You don't have to individually go and find the cookies and the fruits and the nuts and the bottle of wine and other candy that's all involved in the fruit basket. You can scroll through a catalog and pick one basket that has everything that you want in it. And it may or may not contain some other things that you may not care for, but ultimately the work is done for you. You don't have to sift through the store and pick this over here and that over there and then find the wrapping and the basket and put all of it together. There is a manager that's professionally managing your mutual fund or your investment for you. They make it easy and they do charge a fee. Generally it's called the expense ratio. But mutual funds are so easy that they're available in essentially any investment account anywhere. They're one of the easiest things to invest in because you don't have to really pay attention to the share price or not even necessarily all of the holdings within it. You just set a dollar amount and you regularly contribute. So mutual funds, I would say they are of the highest level of ease when it comes to investments. Mutual funds will contain investments like stocks, bonds, CDs, options, exchange traded funds, and even other mutual funds. And all of that can be done in order to just make it easier for the investor. And you even own fractional shares. Again, you're just focused on investing a specific dollar amount. So mutual funds are essentially dummy proof. Next, we have exchange traded funds, and I'm going to give them an A+. Exchange traded funds are the most versatile investment, in my opinion. You can invest them like you would buy a stock, or you can get the diversification you would get of a mutual fund in an exchange traded fund. You can really give your investment strategy a leg up by investing in exchange traded funds on a regular basis. You can own them short term like you would a stock, but you could also own them long term as you would a stock or a mutual fund. Ultimately, for any strategy, you can find an exchange traded fund that can complement that. Suppose you're interested in a specific sector or industry and you don't necessarily want to buy a particular stock, but you'd rather buy multiple. You can find an ETF that is traded based on that particular sector. You can also find leveraged ETFs that give you additional risk. You can find some ETFs that can give you income, like dividend ETFs, and you can find so many different ones that can complement your investment style, and they come with a cost generally, and that's the expense ratio. For example, you can find ETFs that are based off of indexes like the S&P 500 and pay an expense ratio of only 0.03% on an annual basis. And that would be as if you are invested in all 500 stocks in the S&P 500. I would say ETFs are the best thing since sliced bread, and it can complement any investment strategy. So you might be asking, hey Maoli, what about things like Forex and cryptocurrencies? What about life insurance policies and just other investments in general? And those technically aren't securities. So we went over some of the major ones that are invested in all over the country. But ultimately, in order to trade seriously, things like Forex or cryptocurrencies, you need to be heavy on technical analysis and other things like that. And when it comes to things like life insurance policies, they are a completely different discussion, but they can complement your investment strategy. But ultimately, we've gone over the biggest ones. We're talking about variable annuities, stocks, options, mutual funds, and exchange traded funds. And there are so many different ways that they can complement how you invest. And there's nothing wrong if you have a few of those or some of those. You don't necessarily even have to have all of those. But ultimately, it's just best to be invested. To find out more or to understand investing on the core level, find my investment course on financiallypresent.com. You'll just click on products and then courses for stock trading and investing for beginners. If this video was helpful for you, I'd like you to hit that like button, subscribe if you're new to the page, and turn on notifications so that you don't miss out on future content. And until next time, stay present.